Wow. So we are likely in a bear market rally. And so one of the things that you have to focus on is really setting your wits about you and make sure you use your stops. And there's a lot going on. Welcome to Options Trading Pilot. This is your host, Proforma24, your chief trading pilot. And we're just going to go over a few of the things that I'm looking at and see where we're going from there. Remember that last week on Friday, we talked about how the technicals looked dire and so many things looked really negative, but that the opposite side of that coin, when everybody's so bearish, that we have to look at possibly going bullish. And we profited very nicely from that move over the last 2 days. In fact, some of my best trading days have been the last 2 days, which is great. So that means we have the pulse correct right now. Obviously, that can just go away, and that's where we use risk management and all those things. So I hope you guys are trading great and that you are profiting nicely as well. If not, sign up on Options Trading Pilot, like us, and subscribe. Let's add value right now so you can take a look at what we're doing. So let's look at the NQ chart, and NQ is QQQ, right? This is the 5 minute. I'm gonna change it to daily. Yeah, I know I have a lot of lines. And notice that we've been on this huge downtrend, very big downtrend. Let's erase some of these. Here we go. Remove. Yeah, remove. Yeah, sorry. Didn't think. Let's just look at a QQQ so that we don't have to take the time to do that. Okay, so as you can see, we are peaking above this trend line. Don't worry about this purple line. This teal color line is the 20 period moving average. Looks like we want to hit it. But again, we are still on a downtrend within a channel, although this has been aggressive and it opened up a gap. Just know all gaps want to get filled. So in the stock market, when we see a gap, then we know at some point that's going to be revisited. So if this turns down, then we should head back down and fill this. So just notice that this channel is still, it doesn't matter where you draw it right here. Let's say we draw it right here. Maybe it has a chance to get here, but that 20 period moving average is acting as resistance. So it should likely come down. So it's one of those things that we have to be really careful to get overexcited. Remember, higher highs, higher lows is how we confirm an uptrend. This just turned up, and what we need is a higher low, and then push up, and then we can get the confirmation of a break on the at least in the short term of the trend. So again, it's really curious, right, that we have such a good start to this quarter. And we talked about some of the forces that may be causing that. And obviously there isn't one answer, and one simple answer is that it's an aggregation of different things happening. So if we look at it, this is prime time for the elections coming up, the midterm elections coming up in November. I think that's November 8th. And so this is the last month that we can try and promote this trend to move up. So at least it doesn't look that bad. Also, the managers maybe are trying to see if we can catch wind and head on up here and capture a really nice upside. I'm very negative right now on things. So basically what I'm trying to say is that we need to be able to focus on the reality, right? The market, the economics, it's in a bad time. We're heading for a recession. I know the markets are forward looking. I really don't think that the Fed should, I don't think they would as well, really pivot right now toward decreasing interest rates hikes. Inflation for me is a greater issue than the economy. So those are two things that we have to really balance as a nation to be able to get stuff right. So it's one of those things that we really have to do correctly. and you know, we messed it up, right? We messed it up because we had just a huge uproar, right? As far as the market is concerned. Let's see, we can go back. I mean, it was just so big, right? Look at this. We hit a high of 408 over here. Probably we can go further back. Let's go 4 years. Yeah, so this is COVID, October. We hit this and then we just go straight up. We hit that 408 high and we really just been coming down since then. We've had a couple potential breaks that can maybe help, but in the end, we're headed straight down. And so I want you to think about it these terms, right? In terms of what happened to the economy, we froze a train, right? See, think of our economy as like the biggest train there is, and then you stop it. Well, you can't just get it started. And so what the United States did and the rest of the world is like, we're just going to feed it money. And so this downturn that you're seeing here is pricing in the loss of revenues for a bunch of companies, but then immediately V's up because they're like the Fed is gonna give into it. So the question is, if you don't do this, yeah, I think we go further down. But this is all fake money, right? So at the very least, we should get over here. Pre-COVID highs. I'm not sure about pre-COVID lows. Maybe it undershoots. You know, this number is around 237. It sounds very dire that we're doing that. So, you know, just keep your sights on, keep your head on straight. Let's trade correctly. You know, each day we come out and we take a look at what's going on. This is the 5-minute bars. Looks like we're gonna be in this range. I don't think it'll fill this gap today. Hopefully we end up at the high. So let me know, like the trading it's been awesome because we have such large days. I would expect tomorrow to be an accumulation day, which means that we shouldn't have such a large trading day. So as far as the average day range. All right. You guys, let me know, ask us questions, comments, and we'll talk to you soon. I'll try to put another video out here in the next couple of days, see what Wednesday looks like, and then hopefully by Thursday.